Hey there. What if the sharp pullback we've seen in XRP through late December isn't the end of the road, but the final shakeout before a wave of adoption that could finally send it soaring in 2026? Today, we're doing a full, evidence-based investigation into where XRP could realistically be headed next year. Not wild guesses or moonboy dreams, but three clear price scenarios built on real data, on-chain metrics, institutional moves, and the catalysts lining up right now. By the end, you'll know the conservative, realistic, and aggressive targets for 2026, and exactly what evidence supports each one. Welcome back to the channel where we follow the facts, not the FOMO. All data is current as of late December 2025. Let's dive deep. First, let's set the stage with where we are right now. XRP is trading around $2 after a tough correction from its recent highs. Circulating supply is roughly 56.7 billion tokens, with exchange reserves at multi-year lows. Escrow unlocks are at their smallest level since 2017, and institutional wallets, like those linked to Hidden Road, Rail and SBI, have quietly absorbed billions in recent months. This isn't the same XRP we saw in 2021 or 2023. The supply picture has tightened and demand drivers are starting to emerge. So what does that mean for 2026? Let's start with the conservative scenario, a range of $5 to $8 by the end of 2026. This assumes moderate ETF inflows, steady RLUSD growth, and no major new surprises beyond what we already know is coming. Spot XRP ETFs launched in November 2025 and have already crossed $1.1 billion in assets under management, with daily inflows averaging $10 to $15 million. If that pace holds and institutions allocate just 0.5% to 1% of their crypto portfolios to XRP in 2026, similar to early Bitcoin ETF flows, we're looking at $4 to $8 billion in new money. With circulating supply essentially fixed and exchange reserves continuing to drop, that kind of steady buying pressure alone could lift XRP to $5 to $8 without any explosive news. On-chain data supports this. Whale accumulation has stayed consistent through the recent dip, and exchange outflows are at levels we haven't seen since the 2021 bull run. Conservative, absolutely, but entirely realistic based on current trends. Now the realistic scenario, $12 to $25 by the end of 2026. This is where things start to get exciting. The full ISO 2022 transition went live in November 2025. Over 70% of global cross-border volume now runs on these new rails, and Ripple's 300-plus institutional partners are finally positioned to route real money through ODL for speed and cost savings. Singapore, Japan, and the Middle East are already moving significant volume. When the remaining banks fully flip in 2026, analysts estimate $500 billion to $1 trillion in annual flow could seek the fastest path, and XRPL delivers that better than anyone. Even if only 5 to 10% uses XRP as bridge liquidity, that's massive velocity demand. Layer in Flare's yield layer exploding. 131 million FXRP locked and growing fast, with institutions like Evernorth and Vivo Power delegating for 4 to 12% APY. Once US clarity is permanent, more funds wrap XRP into FXRP for real yield plus instant settlement. ETF inflows accelerate to $10 to $20 billion as major players like Vanguard and Fidelity clients pile in. The math adds up. $15 to $30 billion in new institutional money chasing a fixed supply, plus real utility velocity, $12 to $25 becomes the base case. But here's where it gets truly compelling. The aggressive scenario, $40 to $100 or more in 2026. This isn't blind optimism. It's what happens if the under-the-radar catalysts we're seeing right now fully activate. First, Ripple's transformation into a capital markets powerhouse. The Hidden Road acquisition for $1.25 billion and Rail for $200 million, plus board seats on Bitnomial and ISDA membership. This is no longer just a payments company. It's building regulated infrastructure for tokenized finance and derivatives. In 2026, as hedge funds and banks start using Ripple Prime for XRP perpetuals and tokenized swaps, the ledger becomes the settlement backbone for multi-trillion-dollar markets. Second, the XRPL amendments coming in the first half of 2026, XLS30 for Advanced Decentralized AMM and XLS40 for Native Tokenized Real-World Assets. These upgrades let institutions issue and trade tokenized bonds, real estate and equities directly on XRPL with full compliance and programmable logic. BlackRock, Franklin Templeton and others have publicly said they plan to tokenize trillions by 2030. When these amendments go live, XRPL becomes the only major public chain that can natively handle RWAs at scale with instant settlement and sub-penny fees. That's billions in daily volume quietly shifting to XRP as the bridge asset. Add in the end of meaningful escrow overhang, RLUSD potentially hitting $5 to $10 billion market cap as preferred collateral, and ETF inflows surpassing early Ethereum levels. The aggressive scenario isn't impossible. It's what happens when all the pieces click at once. Now let's talk velocity, the factor most price predictions completely ignore. XRP isn't designed to sit in wallets like Bitcoin. It's built to move. If daily cross-border volume hits even $500 billion through ODL, a conservative estimate based on BIS projections, and XRP turns over 20 to 50 times per day, the effective demand on circulating supply is enormous. Historical velocity during peak ODL use in 2021 pushed price higher on far less volume. In 2026, with RLUSD, tokenized assets, and institutional flows, velocity could be 5 to 10 times higher. That's the multiplier that turns $10 billion in inflows into $50 to $100 billion in effective buying pressure. On-chain data supports this across the board. Exchange reserves are at multi-year lows. Whale wallets linked to institutions have added billions during the recent dip. RLUSD burns tiny amounts of XRP with every transaction, and volume is growing fast. Flare's FXRP locking is accelerating. Escrow relocks are at record highs. All of these are quiet, verifiable signals that supply is tightening while demand drivers are just starting to ramp up. So where does this leave us for 2026? Conservative, $5 to $8, steady ETF inflows and moderate utility growth. Realistic, $12 to $25, full ISO 2022 flip. Flare yield explosion, stronger ETF demand. Aggressive, $40 to $100 or more. XRPL amendments unlock tokenized RWAs at scale. Derivatives infrastructure goes live, velocity skyrockets. This isn't about hoping for a miracle, it's about watching the pieces fall into place. The ETF maturation, RLUSD adoption, Flare yield, ISO 2022, escrow endgame, and the upcoming amendments. They're all converging. If this investigation just shifted your view on where XRP is headed in 2026, drop your price prediction in the comments. I read every single one. Smash like if you're holding for the long haul, subscribe and turn on notifications, because when these catalysts start hitting, you're going to want to be here for it. Thanks for watching. Stay curious. Stay holding. We explore the rails that lead to the future. See you in the next episode.